The 4-hour chart illustrates perfectly where the struggle is happening for Bitcoin. Hey guys, it's Keith Allen, and from time to time, when I'm looking at the same chart over and over again, it's hard to see new things. So I do like to change things up from time to time. We're now looking at a 4-hour chart here and a symmetrical triangle forming here on the 4-hour. As you can see, trend precognition on the intraday showing some upward momentum after things were kind of slow here this morning with the markets waiting on the economic numbers coming out here. But let's talk about that for a second. Economic reports came out this morning. Obviously, all eyes on the unemployment report, especially after how the Fed has been, how should I say, kind of soft shoeing its way into adjusting its messaging here. A few days ago, we heard from Chairman Powell in an interview where he sounded, pretty much on message. But then a day or so later, he had it's all a blur to me now, right? The days, it's all running together. But he had a brief statement that said, they're still waiting for targets, et cetera, pretty much the same message, but made 2 points. One, that they would continue to wait until they were confident that price was moving in the right direction, that they did feel that there would still be rate cuts coming this year, although did not really expand on number or price or total volume, which at the moment up until now had been baked in three cuts for a quarter point each for a total of 75 basis points by the end of the year. And then, some of the other Fed presidents have been talking over the past few days. They're all making the rounds here through the media, talking about things that they see that may really challenge the opportunity to cut here this year. Another thing that Powell said, made the point of, was that they're not politically influenced, and that nothing they do has any bearing on the political environment. And so they try to operate autonomously from that, regardless of what anybody's impression is. I would say, though, that if they talk about having to wait through second quarter and even into third quarter, I think a lot of us anticipated one of those cuts would come prior to the election. Now, let's say they're bearing down on November and they're ready to cut. They might not want to cut too close to the election just because of the optics of it. So those are things to keep in mind. I'm now hearing, some sentiment towards 2 cuts or even 1 cut or no cuts this year. That is all wildly speculative at this point, but we look at numbers like this to give us some insight. And one of the things that we saw today was that non-farm payrolls absolutely shattered expectations. The forecast was for 200,000 jobs from the month of March, and we got over 300,000. So that's a sizzling hot number. But and I'm no economist here, so there is some drill down into this, into the different sectors that are involved here, and that seems to be some of the granular details that the Fed is looking at. Of course, we're looking at earnings, et cetera, participation rates, hours. All of these things are factored into the equation here, and payrolls, of course, also up. So these things don't bode well for cutting sooner than later, but they do bode well for a strong economy. So there's a trade-off, right? So maybe this gets us closer to the soft landing narrative, but it doesn't get us closer to cuts, in my opinion. Again, I'm no economist. Take that with a grain of salt. Another thing we've been watching every single day has been the ETF flows. And of course, earlier in the week, we saw this, there's like a big red flag for everybody because Kathy Wood's Arkham Invest, those ARK B shares, outpaced Grayscale for the first time in outflows. And that was a big deal for a moment. But I think when we put this in perspective of how fast these ETFs have grown, that's not such a big deal, especially relative to the total volume that they've accumulated in the past few months. And also, there's some speculation that this was just merely quarterly rebalancing, which certainly is a plausible idea. If we see it happen again and again this month, then maybe that's not quarterly rebalancing. But if it just is isolated here, then that certainly would make sense. I think what we're learning here, bottom line, is that this ETF institutional class of spot Bitcoin ETF buyers and the institutions that are selling them are maturing, and they're starting to understand how Bitcoin trades, and they are, there was so much pent up demand after 10 years of waiting for this thing. It's no surprise that they came in as hot as they did. But now things are cooling off a little bit. And I think that's healthy. It's healthy for the market because it lets the market go back to trading more organically than just, being driven by this ETF demand. There will certainly be more waves of ETF demand coming as there's more institutions coming into the game, but many of them are doing their due diligence process right now, and understandably concerned about the regulatory hurdles because that seems to be a moving target in our world. Back to the charts, though, as we can see, and I mentioned earlier, we have this symmetrical triangle forming here. And the thing with symmetrical triangles is they can go in either direction. All right. The key areas that we look at, of course, we have the new all-time high up, here around 73.8. We have the lower low here around 59 and change. And reasonably, we felt like recently that we may have put in a local bottom here around this 61.5 level. Okay. And that stands at the moment, seems to be holding, right? But what is a bit concerning is, and as you can see right now on the 4-hour, we're pinned between the 50 moving average and the 21 moving average. And I'm going to expand to higher time frames in a second to expand on that concept. But this morning, things were in a bit of a holding pattern, waiting for the economic numbers to come out. And then, as you can see, we see some upward momentum pushing back up. But now that rejection from the 50 moving average. Let's take it now to the daily chart that we've been looking at so much. And again, you see the symmetrical triangle. These things tend to play out before they get to the end. You see the halving right here. That would be, this gets to be a bit poetic, right? If things just coincidentally happen right around here. I don't know. Let's we'll just watch the candles develop and see what happens. But this is a very big range here, and one area that we've obviously been having trouble clearing is that prior high of 69K, right? And so this was, of course, the top of the 2021 bull market. And we have danced above and below this line ever since we started engaging with it here back in early March, right? And so we made it up. We fell through, came back and retested, and we just haven't seen any strength because we keep getting these wicks down below. Well, we're having the same issue in terms of establishing strength with this 21-day moving average, right? We spent a lot of time above it, and through that entire rip, okay, the ETFs were born on January 11th. We got approved on the 10th. They were born on the 11th. And that's when we initially had some, there was a big dump initially because of, all of that pent up grayscale coin that had been locked up for so long. And after those outflows settled down, we started to see price pumping up and cleared that 21-day moving average at the end of January and have been steadily above it ever since, right? Meteoric rise right here without any retest down to this 52K level. That's something I'm certainly aware of, but there seems to be no sentiment on this at this level in terms of liquidity at the moment. And I don't think we'll go there unless we happen to challenge this lower low. At the moment, we're seeing higher lows, which is good, but we're seeing lower highs, which is not good, right? So you want to see higher lows and higher highs, and that's how you get back into creating new all-time highs. So at the moment, this seems to be a really big range to say, we're ranging between 73,800 and now is, almost a 65K level. So it's sub 65K at the moment. And so maybe, it does feel like Bitcoin is trying to establish this local bottom. And again, we said, hey, maybe it's here around 61 and change. But now maybe that's moving up a little bit. And that would be great, right? Get us back up above this 69K level. This is a consolidation range at this point. This was a consolidation range. That 42K, that 40, 40 to 45K level was a good consolidation range right here. Look how much time we spent up in this level, right? And these consolidation zones lend themselves to stronger moves up. So the fact that we're having some consolidation here, in my opinion, is very good. We'd like to see it work its way up, which it seems to be on that trajectory with higher lows at the moment. So that's what we're watching here. But in order to start talking about new all-time highs above this, and obviously there's a lot of consensus that after the halving we're going to see that, because historically that's happened with every halving, we have to handily start printing candles above this prior all-time high at 69K without the wicks below, and then we can start working our way above. So let's look at and see what this looks like now in terms of liquidity in the order book, because liquidity does not lie, right? It is what it is. And so you can see here, we're now in this tighter range of 65K up to 70K. If we can make it back up there, we obviously have some ask liquidity below it, but not a ton. So that's certainly a reasonable target at the moment. And it's just kind of a range by range thing. We had the purple whales, who have historically dominated price action on Bitcoin, had been buying really, really robustly the past couple of days. And last night, we saw things starting to level off here, right? So they slowed their roll a bit here, and actually sold a little bit, and seemed to be okay with letting the market kind of find its footing at the moment here. So something else I want to look at is what red is doing. These red sharks, if you recall, and if you've been watching any of the analysis in the past, you probably remember that red has been really aggressive since Christmas Day. And this was all, I think this was really all related to the ETF hype. Excuse me. They bought, since Christmas Day, they have bought over $4.5 billion worth of Bitcoin via market orders. And you can see it here. If you look down on the CVD, this is our bin CVD. It shows you by order class. These are $10,000 to $100,000 orders. On Christmas Day, they were down a little over $1 billion, and so they were net negative 1.1 billion, and they went up as high as 3.6 billion. So that's a $4.7 billion. That's $4.7 billion worth of accumulated Bitcoin in a relatively short amount of time, and since the March 18th, they've started to distribute a bit into the range. Now, that's all profit for them, right? So understandably, that perhaps they might just want to be looking for some opportunity to buy cheaper. Now, in terms of what we see in the order book here, in terms of liquidity that shows us what could give us a bounce, I want to zoom out to the longer-term chart, because there's some historical data here that I think really paints a very clear picture. Looking at the amount of liquidity that we have in this range, okay, there's decent liquidity here, no doubt about it, right? But there's not a ton. And the fact that we have some depth to it is a positive thing. But what we don't have is a deep concentration, really, on either side right now. So we're basically in a battle. We're in a stalemate here, stuck wedged between this range up here and this range down here. Heaviest concentration down here in the 60 to 62K range, and some secondary support in the 64 up to 65K range. So plausible that this gets tested again, and we could continue to grind up. But it's the side that has the deepest the highest volume, the highest concentration of liquidity close to price, is the one that tends to win the battle here. And you can see that through history, time and time again. Heavy concentration up here, 75 million right in the hot zone, and stacked, right? So there was more next to it. That was over 100 million and had more laddered up, and that sent price down. Same thing from the opposite side. We get a heavy concentration, 127 million here, sends price up. We get some ask liquidity coming above, it knocks it down. Same thing. heavy dose, almost 100 million down here. But look at the depth laddered below it. That is what created this big leg up into, the then all-time high, the top of the 2021 bull market. And then you see heavy concentrations of ask liquidity overhead, 84 million near range with, tens of millions around it. So this is also well over 100 million, 150 million and up. That sends price down again, over and over again. So what we're looking for is, in the simplest terms, the brightest spot closest to price. We don't have it yet. So this, to me, is reason to believe that we are not just yet ready to have that rocket rise into a new all-time high. It will come, but it will come over time. And these big blocks, they can appear at any minute. Literally, at a moment's notice, boom, 100 million shows up. We've seen it happen before, and it can certainly happen again. I would certainly expect it to. But in terms of where we are in the chart, we have to look at the technical levels and trade this one level at a time, and that's exactly what we're doing at this point, right? So Halving coming up, long-term expectation is that price would move up from here. So we're seeing aggressive dip buying in this range. How deep will the dips go, right? Are we going to continue to respect this trend line and continue to move up and make 65K the new local bottom? Or are we going to go down and retest this lower low at 59? The market, at least the bulls, want to see more higher lows so we can work our way into higher highs. Like I said, these symmetrical triangles tend to break out before they get to the end. And this range right here, this is the 19th, right? That's how far does this go? So anywhere in this range is plausible for that to happen. So be mindful of that. Real quickly, a look at ETH, because yesterday we were looking at ETH yesterday as well, and it had the same problem, right? It broke down from the 786 fib up here. I showed you these levels yesterday. We were doing our little risk reward experiment, and look, it's playing out just like I said it would. I said this was a very risky area to trade because I felt the risk reward was not very high. Until we passed these moving averages here. The green is the 21, the red is the 50, and as you can see, it ran into resistance at the 50 and got rejected, just as Bitcoin got rejected from 69K again yesterday, right? We don't have the strength up there yet. And so in this situation, I said, if you're going to do this, if you were going to trade yesterday, then you better have a very tight stop, because price is going to, if price goes down, it could go down further, which it did, of course. And now, to me, in my opinion, I just don't have confidence that this is going to hold here. Maybe this is triple bottom, and I'm no expert on ETH. I don't trade it very frequently at all. So, but my concern here is the fact that it's had a hard time, actually has not been able to reclaim the 0.618. Makes me think that there's a higher probability that it could fade back. We'll just have to see how things shake out here. We do have some support established here at the 3,200 range, and I would say near range from that, 3,158. We have a nice some confluence here between these candles, but this is really where the technical strength is, down at the 0.5 fib. And that would be, in my opinion, a potential good buying opportunity. I'm just not catching knives on ETH at this point, right? I'm looking to see where it establishes its footing. Maybe it's here, but until we see some, some momentum above this 21 moving average, I'm not seeing it. So one more view of fire charts before we wrap this thing up. I'll take you into some shorter time frames just to give you some perspective here. Again, purple not buying as robustly as they were a day and a half ago. And so looking for that to continue. Obviously, we have the weekend coming up, so those tend to lend themselves to some whale games. There's no ETF flows happening through the weekend, so that also eases the demand a little bit and may lend itself to a bit of a pullback. You can see a little bit of the ask liquidity above 70K dropping down into the range. So, it continues to be pressure from above raining down on price to create resistance. And we don't see a lot floating up here from the bottom at the moment. So that's what I'm watching. Hope that helps you out. Nothing I say or share on these analysis should be considered trading advice of any way, shape, or form. So please do your own research, manage your risk, and stay in this game for the long haul. Hope that helps you out. And if you are enjoying these analysis, if you're getting something out of them, please share a comment with me. Smash all the buttons for what it's worth. It really helps me out, and I appreciate that. It helps me grow the channel. So please like it and share it, but most especially share a comment. I love hearing the feedback, and I'm open to any suggestions you have of anything that you'd like to see in these streams in the future. All right. Heading into a weekend. It's birthday weekend for me, folks, so I'm excited about that. Going to have some fun with the family. Hope you spend the weekend doing something you love with the people you love. Make it a great weekend, and as always, trade safe, my friends.